Hey guys, Samuel Larsen here, founderscrowcross.com, and today we are going to answer a question from one of our clients. They are already running a 7-figure business and they are asking, how do we estimate the return on these optimization efforts? So basically, what can we expect the return on investment wise from this? And this is a question that always depends on the value of the company. Because if you take a look at Shopify stock, for example, it's a case here where it was just a fraction of its value just 5 years ago. And optimizing this business would have had a lot less of immediate returns compared to optimizing it now, because it has so much more volume, so much more traffic, etc. However, if Shopify didn't optimize itself 5 years ago, it would have likely never reached this point. So you could have made an argument that the optimization might have been as valuable or perhaps even more valuable here compared to what it is now. So that's an interesting way to look at it, but also means that it can be quite difficult to estimate the actual impact of these optimizations. So this is the scenario one where you have an early stage business. And then you are more optimizing and looking at it completely from a potential perspective rather than the actual tangible returns on that perspective, because you are looking to establish a new baseline here, a baseline performance where you can then say that, like, if we do optimize this 20%, like, you're going to get X results, but you are not there yet, because you are in a stage where you are looking to scale your traffic up, you're looking to scale your conversion rate, average order value, purchase frequency, all of those levers, and there you need all of those to play together in order to get massive explosive growth. So in this case, I wouldn't look at your actual numbers that much. You're looking to value that potential from outside in. So instead of looking at where you are, you look at where you could be. And that's a case where you can estimate how big is your niche, how big of a percentage of that niche you could capture, what could be the conversion rate with that average order value, what would be the buying frequency, and then you can start evaluating that potential. You can think of that in terms of scenarios as well. What is the worst case scenario? What is the average scenario? What is the best case scenario? And this is how stock analysts do it as well. So you have one scenario that is the normal case, one that is the best case, one that is the worst case. And you can see here they have different growth rates added to it. And that way you can then calculate between probabilities based on that. So the normal case, of course, being the most probable. And that's where you have the 60% weight. And then best case, worst case, both 20%. So that's how you can look at it from a pure entry-level perspective. But of course, it's also a bit of an irrelevant question because you don't have that much of an option. Like, you have to be able to nail all of those levers in the beginning in order to get the business to profitable and to grow it, like you see here, for example. Next, let's look at the more established scenario and more of an established business perspective. When they already have a fair bit of traffic, they have reached profitability, and they have more or less their things figured out, if that's ever possible. So there, we want to focus more on the what's called intrinsic value, and think of the future cash flows, inflation adjusted to the present day value, between basically today and the lifetime of the business. Like, how much money is it going to return with these optimizations versus not having this? And that's where you can then start to judge the return on that investment. Now, one thing to keep in mind there is that the intrinsic value, of course, doesn't show up on the bottom line right away. And there's many different ways to value companies. So we want to first get a picture of how much the company is worth, and then get an idea of how much can it be improved. So first step is the estimation of the current value of the business. And this is one way that you can look at it. So you basically have your levers here: monthly sessions, conversion rate, average order value, and profit margin. And some people would also like to think of frequency here as well. But to keep it simple on the top line, I've just kept it like this. And then you do have your yearly profit from this equation. So let's say your business is like this case here, and it's making 34,000 profit at these numbers. Then you can look at the case from, say, purely from a zero perspective, and think of how much of that profitability would increase. Now, in terms of valuing companies and estimating the current value of the business, that's always a little bit tricky because there's so many different factors that play into that. It could be that, like, does it take a lot of owner's time? Is it very specific in terms of the knowledge that the manager needs to have, etc.? And is it a business, for example, with a lot of competition coming just around the corner, kind of a dropshipping business without any kind of competitive advantage, for example? Those would really hurt the valuation of the business. So there are multiple different ways to do it, but I've generally used a pretty simple way of using the 2-year profit as the valuation. So increasing that increases the valuation, of course, like simultaneously. So it's very tied to it. And once we have this established, I like to think of how much can we improve each of these. So typically I take a 3 to 6 month timeline and think of how much can we improve the conversion rate for this business, for example. Then going over and looking at their setup, how much can be improved on the average order value setup and purchase frequency as well. So here we then will be able to judge what the upside could be. And notice first that this is also a multiplier. So this some of these would be 57%, but since it's something that compounds, it's actually more than that, just because you get more people to buy. So of course, like that will improve the average order value. And then having this be a case where people come back as well, it will help on the frequency side. Similarly, notice that I actually don't have traffic here as a lever. That's because in general, it's a lot easier to improve the conversion rate, average order value, and purchase frequency compared to traffic. Because once you start improving or increasing traffic, it tends to bring the other numbers down. So these are the most long-lasting levers from my experience. And this is also how e-commerce venture capital companies typically approach this. So if you wanted to double a business in, say, 6 to 12 months, you would focus on these 3 levers and trying to bring everyone up by like 30%, for example. And that's where you would get a 120% growth on that one. That's a pretty typical venture capital model. And then they will basically hold it for a year or so and then sell it over and move to a new one. So a pretty good way to buy and sell and profit from that kind of model if you are good at these different levers. So think of it like this when it comes to estimating the value of the CRO efforts long term. One thing I'd want to add here is that this is in combat with traffic. It's very rare to improve or increase traffic quantity while also improving all of these different metrics. But if you can achieve that, perhaps you find a better source of traffic, etc., more quality traffic for cheaper, those kinds of things, being able to acquire more, then you can really hit an explosive growth here, because traffic is something where it is possible to double, triple, quadruple it. And if that is something where you can hit that as well, then this valuation can go through the roof. And you can have a scenario like with the Shopify stock where it's just like all of these different levers are going in your favor, and stock just like becomes 37 times more valuable than it was in the beginning. So that's the answer to the valuation question and how to estimate the results for e-commerce funnel optimization. Now, if you are interested in these kind of videos, make sure to subscribe to the channel, like this video since you already watched this far, so please do that, you owe it to me. And then if you are interested in and you already have a fairly successful established e-commerce company, check out our website, practising.com, where we help you get the most out of your existing e-commerce traffic and help you with increasing these different levers as well. Hope you found this useful, and I'll see you in the next videos. Cheers!